Can you still get rich in the stock market? We're going to talk to a 10-year Wall Street veteran. We're going to ask him to kind of reset. We're going to pretend he's 21 years old, just coming out of college, maybe 22, and he has all the knowledge and experience he has today, but he's starting from nothing. We're going to have this conversation with Taylor from Life Goal Investments, man. How you doing?
I'm doing great. Thanks so much for having me. This is a great question. It's timely because I think a lot of people are of the mind that valuations in the stock market are stretched and the economy's changed and it might roll over into some tough times, so on and so forth. So I think it's incredibly timely to look at some of the maybe the longer term statistics that tell us where the stock market goes and whether you're still able to invest over time and build wealth.
I think the real net of this for me is there's a lot of doom out there about
No doubt.
just folks believing the system is rigged. My opportunity is not there. It's not possible. I was born in the wrong time. All of this nonsense. And I just wanted to spell that, right? Let's pretend you're coming out of college today. You had to, you wanted to build your stack over time. I don't think in the stock market much has changed if you were born in 60 or 70 or 80 or 90 or whatever. But I'd love to hear what you would be doing, today as a 22-year-old. You got nothing in the bank. What are we doing?
Yeah, I think the first thing you're doing is just building up that buffer so you have an emergency fund. And then, but if we're just saying, "Hey, let's focus on stock market," we're not talking about budgeting and all that nonsense.
Sure.
Not that it's nonsense, but if we're just
Mhm.
focused on investing and do you have the ability to make money over time? There is
Yeah.
absolutely no doubt the stock market is the greatest wealth driving mechanism of all time. Right. And it's made more people wealthy in this country than anything else. And maybe real estate would be right there as well, and you're an expert in that space. But between the two, that is where wealth has been generated for people throughout history. And so when you look at the numbers, 90% of the time, 90% of the time, the economy is expanding. And at
Mm,
the end of the day, if the economy is expanding, companies, stock prices as a whole, at large, are a function of the direction of the economy. So thereby, the stock market generally goes higher. And when you look
mhm,
at a bull market cycle versus a bear market cycle, historically, when you chop them up throughout time, you see that bull markets last 4 times longer than bear markets on
mm.
average. So this is just telling you that on the whole, the economy grows and the stock market grows along with it. There's a reason why, if you look at the past 100 years worth of data, the S&P 500 is annualized 10%. On an annualized basis, you're getting 10% gains out of the stock market. And a rule of 72 means that you take 72 and you divide it by your return, which is 10. Every 7.2 years, the stock market has doubled your money. Now, obviously, there are times where that has been, way overinflated and the numbers came in significantly under that. But if you look at a 20-year period of time, there has been something like 2 years throughout history of the stock market that you could have invested and been negative over a 20-year period of time. And that is something that is incredibly, incredibly abnormal when you look at 120 years or 140 years. So at the end of the day, stocks go higher. It doesn't feel comfortable. And when
Mm.
it feels the least comfortable is the best time to invest. And when it feels the most comfortable is generally the worst time to invest. So don't try to play the game of psychological, I'm going to enter the stock market now because I feel good. Chop everything up, dollar cost average, systematically invest it into diversified portfolios.
Yeah, I think there's so much wisdom in there. And again, I am guilty of this, and I say this as someone who made all the mistakes in the world. Um, the key to getting wealthy, whether it's stocks or real estate, is you've got to own them long term, right? There was a stat I read years ago about different stock portfolios, and the stock portfolio that did the best is the one that bought and never sold. Just think
Yep.
about that, right? You buy a
Yep.
stock, you never sell, you hold for decades. Those portfolios historically have done the best because you just get in. Ownership of assets is how you get wealthy. Now you can dollar cost average, you can buy, you could buy it in tranches. Where 22-year-olds make mistakes, and I say this as one who made the mistakes, you're full of piss and vinegar. You think you can outsmart the market. You have all the time. You think you can do this, that. You're looking for the edge. You're looking for the cheat sheet, the easy button, and you're a trader.
Yeah.
The average trader gets their ass kicked.
Yep. Yep.
Don't be a trader. Get disposable income, stack paper, buy on a consistent basis, and you too can get wealthy. The system has not changed. Stop complaining. It's the same crap with different numbers. You're making a shit ton more money than I did. My first job paid me $3.15 an hour. You're not making that. So, I mean, just the amount of complaining I see out there. If you don't want to do it, fine. That's on you. But if you
Right.
want to do it, the rules have not changed. Long-term ownership, bought consistently, held over time, don't increase your lifestyle. Getting wealthy has not changed. I think it's 3 steps. Stack dry paper or dry powder, which is disposable income. You become elite at something. I don't care if it's stocks or real estate or whatever. And time. You need a decade. That's it. Those 3 things done over and over again will make you wealthy most of the time.
So I'll try to expand upon that time concept that you just threw out there. So who's the greatest investor of all time?
I believe it's Warren Buffett.
Warren Buffett, right? So Warren Buffett throughout history has produced an annualized return of 22%.
22%.
Unbelievable number, right? 10% is the
Annualized.
average of the S&P 500. He's done more than 2x that, right?
So he's
the
doubling
greatest
money
investor of all
roughly
time.
every three and a third years, roughly.
Correct. You ever heard of a guy named Jim Simons?
I have, yes.
Okay, so Jim Simons dwarfs the number that Warren Buffett put on the table. He did 66% return throughout his career.
How long
Jim
was his
Simons
career?
is worth, yep. So that's exactly where we're going. So Jim Simons is worth about 20% of what Warren Buffett's worth. Why is that? Because he did it for 30 years. Warren Buffett has done it for now 82. What is he? He's 92, 93 years old.
Yeah.
He started investing when he was 10 years old.
He did, yeah.
So
That's
there you
the
go.
key.
Again, that is the
Time.
power of compounding interest over time. That is why Warren Buffett is the ultimate great. His partner, Charlie Munger's 99 years old. I mean, those guys are still sharp as a tack. But to your point, it is the power of compounding that takes time. The biggest mistake people make from an investing standpoint is, and I will never give someone an answer to this question. Hey, Taylor, what's your favorite stock?
No.
I don't know. I don't know anything. What stock is going to do the best? That is not what you're looking for. You're not looking for the stock, the crypto, the anything that is going to provide you the best returns. What you're looking for is a portfolio that you can put your money in with the highest degree of confidence that it's going to get you to where your goals are down the line. And oftentimes that is far from, hey, I want the best performing asset and I want to predict what that is, because that comes with substantial risk. You're trying to set up a portfolio allocation that allows you to put the most amount of money into the market, the highest percentage of your capital, with confidence that it's going to compound positively over time and not have a big enough drawdown to kick your ass out. That is what you're looking for.
No, I couldn't agree more. Again, as somebody that was 22 and made all these mistakes, I got it. I mean, I understand. I know what it feels like. I know the energy. I know the passion. I know the hunger. Traders lose. I ran 7 grand to 200 grand. I felt like a genius. And then I lost 80%.
Yeah.
I know it. Just hold for the long term.
And let me not sit here and make it sound like I've never made a mistake.
Oh, yeah.
I have made a lot of mistakes too. Granted, I have not, admittedly, I haven't made the mistakes that you have because my education is in the background of this. So before I had any money, I had, maybe 20% of the knowledge that I have now, 10% of the knowledge, maybe a fraction, whatever. But I did know those hurdles that are bug lights to people. Remember
Yeah.
we were talking about Dave Portnoy?
Yeah.
Remember that?
Yeah.
He was saying, "Who is Warren
Oh,
Buffett?" I
yeah,
smacked Warren Buffett.
I'm just throwing darts at the wall and killing it. I remember
Yep.
that. I'm like, this is not going to end well.
You called it. You were like, "This is not going to end well." And then 2022 hit, right? And that high flying stuff gapped downwards massively, and we haven't heard Davey Portnoy on
No,
social
he's
media.
now just talking about
sense.
sports again.
He's back to
gone
sports.
back
He's
to he's gone back to his hole in the wall.
Exactly.
Yeah, if you trust me with this, because I remember this feeling. I remember sitting back. I think I was about 150 grand, like 7 to 150. I remember sitting back, going, "I'm better than Warren Buffett." No, you're not. You got lucky. You got lucky with time.
My question to you is, I have gotten over my skis and risk before.
Mm-hmm.
I knew I was over my skis and risk. And what's very hard is to watch something run and you say, okay, this has now become an outsized position for me. and I
Mhm.
know I need to trim it. What's hard psychologically without you setting up rules, which is what I advise people do or have someone do for you, and without setting up rules, it's very hard to pull the trigger on selling a winner or trimming a
Yeah.
winner is extremely hard to do. This horse just ran 19 laps in a row faster than every other horse out there. Yeah, well, he's probably getting a little tired. Like, but
Probably.
it's really hard to determine when he's getting tired because when you pull him out after the 13th lap and he runs faster for 6 more laps, you're like
Yeah.
kicking yourself in the butt saying, hey, I made a mistake here. But
Yeah.
that's why I think it's really important to have rules and systems in place to say, if something goes to here, I need to trim.
Yeah, I think there was a couple of things that I've admitted a few times. We'll wrap them up here. First and foremost, you've got to have stops. Absolutely. You should have rules at some point for maximum position size of a
Correct.
stock, right?
Correct.
You should also at some point have rules that, take your money off, like take your initial capital back, let the
Yep.
rest run, right? There are
Yep.
things that I could have done to certainly reduce the pain. Stops being, again, one that to put in there. The other thing that I admit is I was right, aka lucky, so many times in a row, I stopped being disciplined. Right. I would tell you my first 2 years, maybe the first 18 months, I was ridiculously disciplined. And, but I probably went from 7 grand to like 18.
Right.
But a double's a double. That's almost a triple, right? And then you go
Right.
from 18 to 50 and you do less work. And then you go from 50 to 110, you're barely doing anything, you
Well,
know.
and admittedly, you look at it this way and say, listen, I'm doing less work and I'm making more money. Why? Because you're
Exactly.
letting positions run on a heater and they're going. And again, they're going to gap downwards at some point. And the higher that rubber band gets stretched upward, the more painful it is when it gets stretched back
Yeah.
downwards in the other direction, the reverberation there. But yeah, when you were doing less work, you were making more money.
Yeah, exactly. And I thought that would never stop. And again, looking back on it, I admit how stupid and ignorant, and I deserved every penny I lost. Um, but yeah, I think I just it's possible. I just want people to believe it's possible.
And one
That's
other
what I
thing
want.
I'll say to your credit
Mm,
is you now I know you haven't been a big proponent of stocks and investing in public markets since then. But
mhm.
what you didn't do is you didn't crawl into a hole in the wall and say, hey, I'm no longer taking risk
Oh no, yeah,
because risk is what creates reward in the long run. You might have taken your lumps for 6 months and said, like, felt bad about yourself, but then you said, hey, maybe that's not my game. I'm going to move on to something that I feel that I have a little bit more control over, which in your personal state was real estate. Let me
absolutely.
move to real estate instead. I have more control here. I know I have to take risk. I know I have to sacrifice, and that's what you did, and you've done phenomenal on that front. But more people than not don't have that push through mentality,
Yeah,
unfortunately, and they get stuck and they get whooped, and then they're like, not for me.
I'm
I'm
out.
done. I'm gonna let my money
Game
sit in
over.
a bank account.
No, absolutely. Again, I've been in the stock market, I guess, a little bit for the last 18 months or so, but there was 15-year period where I didn't touch it. I considered it the largest casino on the planet, given my personal experience. But you're right. I still took risk. And the reason I chose real estate is I could see it, I could touch it, I understand the rules, I could set it up. Right. These were all my personal decisions. I could not identify that Enron was a scam or WorldCom was a scam,
Right.
because they were audited by, just all of those things. So I was like, nope, fool me once, shame on you, fool me twice, shame on me. So I never went back for round three. So
And
crazy
and and
stuff.
and you've done just fine. But I can assure you and attest to the fact that unless this is the first time in history that people aren't able to get rich in the stock market over time, it's not
Yeah.
to say the next 6 months is going to be great. Who knows the next 6 months, the next 6 weeks, whatever it is. Over time, the stock market goes up. And I can assure you, I've seen a great brochure on this. It's called Learning the Lessons of Time, and it's Time Magazine. And the cover of Time Magazines throughout time is the US going broke, US oil embargo, all of these nasty, nasty, nasty headlines. And you see the stock market just
Mhm.
climbing its little way up the long list when you zoom out and look at it from a long time frame.
Folks, the key to getting wealthy, again, for me, is 3 steps. You have to have dry powder. You have to live below your means. You have to become elite at something, right? You have to become unbalanced. And then time.
Yep.
Taylor, where can people find you?
Totally good. Yeah, find us at Life Goal Investments. We're on both Instagram and TikTok, so whichever one you prefer there. But Michael, appreciate you as always. You're a wealth of knowledge.
Thank you, buddy. I appreciate you.